JB here. Hope everyone's doing outstanding. Wednesday, June 4th, 8:58 a.m. on this fine morning. Talk really quick about the market. Some names I'm looking at go from there. S&P futures pretty much flat as a pancake. They're actually solidly in the, well, not solidly, but in the green overnight and earlier this morning. And then we had the ADP jobs report came out at about 8:15. uh, Weaker than expected, right? And nothing crazy, but it's like, I put it on the watch list. It almost feels like the bears are waiting for the next shoe to drop. Here we are, the S&P recouped all of the Liberation Day losses and then some. The highest close at the highest levels we haven't seen since the end of February. And then this is all in the midst of all these headwinds, right? And I mean, if you read the headlines and the articles and all the fear mongering and the yields and the debt and the geopolitical tensions and recession and the inflation and the tariffs, and you can go on, the U.S. debt downgrade, like you can credit rating downgrade, you can go down the list of all these catalysts that we should be at 35% to the downside, right? I mean, I'm half of me is a little sarcastic here, but if you read some of the stuff, you would think, even just reading the headlines this week, you would think that the market would be off 10, 15% for the year. I mean, now the big piece this week, and I talked about a couple of weeks ago where we had like kind of like that um, uh, data and news vacuum. There wasn't much in the way of news, so they filled it with that Japan yen carry trade 2.0 situation. That may still pan out, who knows? But now this week it's all about debt, right? And Elon Musk uh, coming out yesterday afternoon after he's been pretty loyal to the new administration, coming out on the other side saying, wow, this big, beautiful bill is just going to add a tremendous amount of debt. But I mean, I don't know. I know he's trying to go to Mars. It's like, what planet is he on to not know how the debt has been? It's been unsustainable for years now. It just only, becomes a great talking point when with the tariffs and tax bills. And then once the tax bill gets done and this big beautiful bill gets done, then no one's going to talk about it until the debt ceiling, whatever. So it's only comes up at these points. But he was working in the administration as Doge trying to cut expenses. So I think it's like a double. It's a it's like he feels like he did all this work and now it's going to just get torn apart. It's like why would I go and do all that work if you're just going to continue to go down that path of unsustainability in regards to debt? But we'll have to see. Yields are remaining kind of sticky, right? So the yields upticked yesterday and the day before, despite the market's rally. So that's certainly something to watch. But of course, some of it's the function of the debt, right? So we get some clarity there. And then also this morning you have POTUS, and it's funny again. I said it with his Apple and Apple News. I don't know for 2 weeks ago, where he's like, "Oh, we're going to slap 25% tariffs on iPhones not made in the U.S." because Apple had announced their factory deal in India, right? So he saw that news, and then talked about the EU, right? And there was last week was China, right? He sees these headlines, and last Thursday it was the Treasury Secretary or the Commerce Secretary, Besson, whatever, saying that China trade talks seem to have come somewhat to a standstill. And then the next morning he posts that they violated the agreement, right? It's just funny. So today, like if you read the articles overnight this morning, the EU was set to do their meeting on Thursday and to cut rates for the eighth consecutive time. So the US started cutting rates in September, and then we stopped, right? We put a pause on the rates, which I think is a good thing because you want to have flexibility. The EU hasn't done that. They've continued to cut rates. This will be the eighth time they're doing it on Thursday. And of course, he reads those headlines. And what does he do? Friday, in the morning, 7 a.m., 7:30, it's usually when it comes out. He's slamming on his keyboard, or he's talking to someone who slams on their keyboard to send out the tweet. So he pretty much saying Powell should cut rates. I mean, we'll see what happens. Right now, I think the Fed's in a good spot, right? They have the flexibility because they haven't cut rates like the EU has. So we'll see how this all plays out. But funny, I keep talking about the headlines too. I just posted earlier the Mag 7 performance since April 7th. Just crazy. Everybody was saying Tesla's going to be in the graveyard. It's up 47% since April 7th. Same, you take a look at Nvidia up nearly 50%. So just remarkable stuff. It just goes to show. I'm not saying that there's not risk in the market, but like I was saying yesterday, I mean that's why you're in the market. The holding a stock is the reason you get paid is to hold for the risk, right? Because there's risk implied that the company go bankrupt, that earnings could decline, or they can cut their dividend, or slower growth. So that's all that's baked in. So it's like almost all right. Rants for other days. So overall market, I talked about 586 to 597 on the SPY. Sure enough, came right up to 597 in the afternoon, and that was the resistance. We'll have to see how things play out here today. We came to this 597.67 in about 8 o'clock this morning. Probably some chop here. I'd actually prefer red opens, and we've had red opens the last two sessions. So a slightly red open here today. Maybe that bodes well. We get some chop. then on Friday, the big jobs report. So now with the ADP report out, that was rough. And typically, some people look at ADP report kind of as a bellwether, bell ringer, whatever you want to call it, for the jobs report on Friday. Certainly put some word of caution there that, hey, maybe finally we're getting some hard data. So we'll find out on Friday. So that's kind of the overall market. So to me, I like to see chop. I mean, yesterday was another strong session, open in the red and just a melt to the upside till 2 o'clock. Similar to Monday, right? We hit all the way down at 585 on the SPY and then bounced. So maybe some consolidation here before the next leg. All right, so now just individual names. Lemonade laid an egg yesterday, opened in the green, gave it back, and then just pretty much treaded water at 35. Every time it started to bounce, 35.60 back to 35, 35.80 at 2:30, then back down to 35, and then close at 35.09. Hopefully it can hold that 35 handle. If it does, I think it's the squeeze is still on. I think it's trades over 40 in the coming days. If it shows some weakness in lieu of locking the June strikes in for a loss, I'll probably look for some more strikes, probably lower strikes or later dated strikes. That's Lemonade. Joby up 7% yesterday on that Saudi Arabia company news, the memorandum of understanding. I was hoping there'd be some follow through and close over $9. That wasn't the case, all the way down to $8. It is holding that 8 handle. This morning, Canaccord came out, reiterated their buy rating and $12 price target. Hopefully that's the kick in the butt it needs to get back over $9 and beyond. I'll be patient here. I was looking to add some more strikes over 8, but I'll just be patient. Just hold my July calls. Great day yesterday. When I say great, it wasn't even up too much for most of the day, and then some end of session volume. Boom, closed right at $43. Well, 42.98, right? Still like this one. My calls are coming back to life. The June strikes. I was talking about adding more strikes over its 200-day moving average, which it closed above yesterday. Maybe today's the day I'll add some more strikes. GameStop, disappointing day yesterday. Gave some of the games back from the previous 2 sessions, but still up to the right. It gets over $32 and holds. I'll add some more strikes there. And then some other names I'm watching. Pool, finally some life yesterday, right at the 50-day moving average. I keep talking about its moves that it's had back in March from 330 all the way up to 370. Back at the end of April from 280 all the way up to 310. It's had these moves back at the start of the year from 320 all the way up to 360. And these are short time frame trades, right? So it's not like it took 5 weeks to do. It took 3 or 4 or 5 sessions. So I would bet on it happening again. And hopefully this could be it if I get some calls. So still eyeing the 330s. Still looking at TKO here too, up 3 days in a row. I'm missing a bigger candle yesterday. Don't be surprised if I had some strikes there. It also has bullish crossover on the momentum indicators, right? So the MACD, that looks like it's crossing over. Once that happens, could be more upside up to 170. And then other names, MDB reports earnings after the close today. I was hoping to trade some premium build into earnings. I'll probably pass. DocuSign's tomorrow. That one's performed better. The calls were up actually yesterday, even with the stock up 2.7%. I think it was 25% on the call side. The 105s look interesting on a risk reward basis. So if the market finds some footing, might get those. And I think that's it, folks. I'm trying to think of some of the other names. I was talking about small cap bio. So the Corbis CRBP is one. Turn Pharmaceuticals, right? That's one of my old GLP-1 friends. If some of these names start trading, a continuation here today, I might look for some names that trade less than cash value. And there's been a lot of situations over the past where these bio names trade at less than their market cap. So they have, $250 million in cash, but it's a $200 million company. And some of those have, at some point, there's mean reversion, right? Then the stock goes up or at least trades over cash. So watching some of those. Let's have a great day, folks. I'll be back on audio later. Rock and roll.